everybody. Welcome to today's session. In today's session, we're going to go over the midweek analysis, obviously, what I anticipate to see the market doing for the rest of the week, and the impact of the US election on the dollar index. So if that sounds interesting to you, stick with us until the end. Don't forget to like this video and share with a few friends that you believe will also find value in it. So, excuse me. So the US dollar, as we can see here, as the week began, the dollar started pumping bearish as I anticipated in the Sunday breakdown or the weekly analysis, pre-market analysis. And the impact of the US elections, we can see like it has been bullish for the dollar. You can see after it was announced officially that Trump was president, the markets just went crazy bullish, crazy bullish, right? So what I was looking for at the beginning of the week was for prices to actually break below here, give us a retest before, and then we continue selling, right? Now, prices did break below here, gave us a retest and a confirmation, so we took a sell. Obviously, we were in deep profits, but luckily for us, we do have good trade management. We were already at break even when this happened. So we were stopped at break even, we didn't lose anything. However, what I'm anticipating to see the market doing right now is prices retracing until at least somewhere here. As you can see, it's kind of losing momentum right now. So I'm anticipating to see prices retrace until here. And then I want to see how it will be reacting here, or the momentum of when it reaches here, how it will be. As the impact of the election was bullish, right? Now, what I believe the US dollar is actually waiting for right now is excuse me. So what I do believe the US dollar is actually waiting for, it's this right here, the federal funds rate, right? The interest rate for the US dollar, which will be tomorrow. So that's what the fundamentals or what the US dollar is really waiting for. Now, if it comes out positive for the US dollar, then best believe the US dollar will skyrocket into the stratosphere. Or if it will be bearish, then we will see a slight pullback, but in the long run, I believe it will come back, right? Now, let's look at what it's actually being anticipated. So what they're anticipating is that the previous or the current is actually at 5% interest, but they're anticipating that the Federal Reserve will actually cut the interest rates to 4.75, which will actually be a decrease in the interest rate. Now, obviously, we do understand that once rates are cut, it's always negative for the dollar. So as you can see here, interest rates at depository institutions lend balances held at the Federal Reserve and other depository institutions overnight. Actual or greater than the forecast is actually good for the currency, right? Actual greater than forecast. So if it's greater than, it's always good for the currency. But if it comes out less or worse than anticipated, meaning that if there is a cut, that will actually weaken the US dollar. So I do believe that tomorrow we do have a chance that the US dollar will actually cut the rates and the dollar might be bearish for a while. But that's my anticipation. Obviously, it's never really logical to trade fundamentals, as I always say. But if you do trade them with proper risk management. I'm against trading fundamentals. I only stick with technicals, but I do let fundamentals lead my way. So for instance, tomorrow, if the interest rates are cut, I will look for structures being broken. So for instance, this is obviously the 4 hours. So if prices do break below here, I'll be waiting for a retest, looking for a sell continuation until somewhere here. But if they do come positive, then obviously I'll be looking for a continuation on the bullish side. So that's my view on the dollar right now, as the impact of the US dollar election, how it has impacted the pair, how I'm anticipating it to play out during the interest rate tomorrow as the rates announce their cuts, and how I'm anticipating it to play out for the rest of the week. So this is how I'm anticipating it to be. Obviously, we do understand that the US dollar is inversely correlated to some pairs like Euro USD, GBP USD, and gold. Although gold has recently been off the charts, so if you will, well, the gold isn't really following the dollar. So you can see right now how the dollar is dropping, how gold is dropping, obviously. So I told you I'll be looking for, on the standard analysis, I'll be looking for prices. If they do break below here, then we'll be looking for sales. Now prices have actually already broken below here. I don't trade gold, so if you are watching it, hope you do trades. However, for those that are more conservative, you can wait for a retest. If prices don't hit here before they come back here, then you might look for a retest right there before you actually take any trades. Meaning you might look for that and then you get that, right? But it's highly unlikely because prices have already come a long way, a very, very long way. So the biggest probability is that prices will just finish the move. Now you see this break below here. Let me show you how you can actually catch these minor moves, if you will. So for instance, if you are actually anticipating to see some kind of a bearish continuation, you need to look for a change in trend. A change in trend, how do you change it? You look at the trend lines. They are called trend lines because they actually determine what the trend is, for those that were actually wondering. Now, okay, let me get back here. Now, if the trend line indicates that the trend has been broken, obviously you need to actually up your game and look for trading opportunities in the opposite direction because the trend has been broken, if that makes sense. So with gold, the trend was broken here once this trend line was broken, and you can see prices broke below here, broke below this structure. They broke below this structure and the trend, and then they came back to retest this structure right here, which was somewhere here, right? I'm putting it here because this is the most recent structure. Now, after that, you can also add more confluences such as the Fibonacci and all that. This is just a rough explanation on how you could have caught this trade, but this is not entirely how I analyze and take trading opportunities. For that, sheesh, we have to sit down for at least a month for me to give you my game. But roughly, this is how I do it. In some scenarios, obviously, you just get a quick trade right there, retest on this structure and trend line. This would have been your confirmation. And your entry after that would have been that. Stop loss above this candle and structure, aiming for these lows, giving you a 1:7. Right now, you would have been floating at around 1:5.6. So basically, that's one way of looking for entries, but you know, gotta be careful with how you do them. So basically, gold, I'm anticipating to see how it actually continues going lower and lower, if it will hit these targets or if it will retrace and retest this market structure here. Guys, this is just a quick weekly analysis, quick midweek analysis. Let's also look at JPIX, what's going on with it. With JPIX, you remember I told you it's very risky for you to take a trade just because the candle closed with a doji. And I was waiting for proper confirmations before I actually take the trade. And you can see right now, if you took a buy, you would have been in the chances of losing a trade because the candle it's actually looking kind of bearish, the weekly candle. It's kind of looking bearish right now. So prices might keep on going lower, but we're still not sure because prices have not yet broken these lows. Now, so with JPYX, prices are still ranging in here. So if prices do manage to break below these lows, I will be looking for sells. And if prices do manage to break above here, I will be looking for buys. And since prices are still in here, I'm not taking any trade. I'm holding still, waiting to see what's really going to happen. With JPIX, so far, no trades. With DXY, we've gotten one trade, went about 1.5 hour, and then we stopped out at break even because of the fundamental release, because of the elections. And now we know what you're watching. We're actually more focused on DXY because it has more trading potential. And tomorrow we do have the interest rates. So be careful with that. I don't recommend you to trade news, but I've given you what I believe will happen. So stay tuned. If you're still not yet in our free Telegram group, be sure to join so that you'll get more updates on the lower time frames and what I'm really watching. And for even better updates on which trades I'm taking, be sure to join our free, it's not free, our paid VIP group. Um, so yeah, guys, and if you're still not part of the family, be sure to subscribe. Share with a few friends this video that you believe will also find value in it. Till next time, guys. Appreciate you all. Take it easy out there. Peace.